Hello and welcome to News Center with me, Parikshit Luthra. Our focus today is on Tata Motors, which has launched the new Altroz hatchback at a price point of rupees 6.89 lakhs ex-showroom. This is the first major upgrade that the car has got since it was launched in 2020. Altroz is a premium hatchback and is positioned competitively against the Baleno, the Swift, the Glanza and the Hyundai i20. Tata Motors, which was the second largest car maker by market share in FY24 after Maruti Suzuki, slipped to the third place in FY25 behind Maruti and Hyundai. The company's electric vehicle market share is also under pressure due to stiff competition and more launches by other OEMs, including JSW, MG Motor and the Mahindra Group. If the company's EV market share was 73% in FY24, the same came down to 54% in FY25. But the company is now getting ready to launch at least 5 new products in FY26, and the new Altroz is a critical part of the strategy to win back lost market share. I caught up with Tata Motors Managing Director Shailesh Chandra about the company's FY26 strategy and began by asking him about the upgrades that the company has given to the new Altroz to make it more competitive. Listen in.
We have redesigned this product in terms of its styling, which is more modern, which is strikingly, agile. You'll see different kind of elements like flush door handles or the new lighting elements, which is very modern. Or you talk about the wider proportion of this car. So it has really lifted this car in the hatchback, premium hatchback segment. Also, the interiors have made more plush with color, material and fabric. So overall, a lot of first-in-class tech features, high focus on comfort. So it's a car which the target customers are going to really like and be very proud to own.
Okay, now could you give us a sense how much does the Altroz contribute to Tata Motors sales percentage-wise, and how do you expect to increase this with the latest upgrade?
So, at the start of the interaction, you said that it is getting a refresh after 5 years. So the fifth year, had been really challenging, which is the last financial year because of aging of Altroz. The peak volume that it had done was in FY24, just a year back, doing nearly more than 70,000, if I'm not wrong. But it literally halved in the last financial year, and that has been the reason for why the market share for us came under stress, because we lost nearly 35,000 units in Altroz. And therefore, this year, it should show the revival of this product, and therefore, it should really help us big time in terms of volume growth as well as market share growth.
Right. Could you give us a sense of the offtake you're looking on a monthly basis, production-wise at least, sir?
I've kind of given a hint, but I'm saying that typically any segment we are present in, we aspire to be holding a market share of about 20 to 25%, which means that you are among the top 2 or top 3 selling cars in that segment. That's the aspiration. The segment size is about 3 to 3.5 lakh a year. So you can do the arithmetics around this.
Great. So clearly, sir, it's going to be very important for you to claw back your market share. And the reason why I'm talking about market share, because as we see the data, the retail data, shared by the Federation of Automobile Dealers for the month of April and also for the full year fiscal 25, there is a marginal decline in your market share by at least 1%. So you're saying that it was the low sales volume for the Altroz, which was the biggest reason for this, and you feel that with this new launch, you will be able to claw back that share?
First, it is important to understand, Parikshit, that the industry last year was a tale of two cities. The hatches declined by about 13%, and the SUVs had grown by about 10.5% or 11%. And therefore, the players who had exposure to both SUVs as well as hatches pretty much mimicked the slowdown in the industry. But SUV-heavy players did see the benefit given the growth rate that we were seeing in the SUV segment. As far as we are concerned, in the SUV segment, we had an industry-beating growth of nearly 11.5%, 12%. Hatches, which declined by 13% in the industry, our decline was more than 30% because of the aging of two products that we have in the hatch segment, which was Tiago, which was also in the fifth year, requiring a major intervention, and the Altroz. And we lost nearly 50 to 60,000 numbers as compared to FY24 because of the issue of aging and also the decline of hatches which we were seeing. But we launched the model year, intervention, and a new Tiago was launched in January 2025. And in quarter four, we saw a significant jump in Tiago, coming back to the volume levels where it used to be. And now we have Altroz, where we had seen the significant decline, that also coming with a very strong refresh. And therefore, we have a very low base effect of FY25 now. So hatches should be the area where our growth rate should be extremely high. But also on the SUV side, you are seeing the success of Punch and Nexon continuing to thrive. We have the full year now available for both Nexon CNG as well as Core. We are going to add an additional product, which will be Sierra, in the second half of this financial year. So on the SUV side also, there's a lot of action. So both on hatches and SUVs, we clearly see a strong revival, and therefore we should have an industry-leading growth this year.
Right. So do you believe that it would be quarter one when we would see Tata Motors clawing back the market share, or it would be more towards quarter two?
You will see through this year our market share increasing.
Also about the product onslaught from Tata Motors this year. If we saw a muted demand across the industry last year, and now you're coming up with new products almost on every month or in 2 months or 3 month basis, what is the kind of product onslaught or offensive that we can expect from Tata Motors?
Our refreshes are going to come in time. So there will be one refresh. You have already seen the new Altroz. There will be one or two more which you can expect in this financial year. Then there is expansion of EV portfolio with Harrier and Sierra also coming in this financial year. Then you would have the ICE portfolio, which will come with a new nameplate, which is again Sierra ICE. So a lot of actions that you are going to see during the year.
Right. How would you describe the current market sentiment right now, especially in the entry-level segment, Mr. Chandra?
See, at an industry level, or if you really see all the consumer-facing industries, there has been a bit of slowdown for last 1.5 years, and we see that trend right now, continuing, and therefore, at an industry level, we are seeing pretty much similar kind of moderate growth as we had seen in FY25. Specifically talking about entry segment, and if you really see the hatches segment, which has been declining as far as the share of TIV is concerned. But within the hatch segment, if you really sub-segment the hatches into 4 parts: entry, mid, high, and premium, there's a gravitation towards the premium hatchback segment, and it is coming at the cost of significant decline in the entry hatch segment. So I think entry hatch segment will remain under pressure. There's also the customers who would be considering an entry hatch. A section of them is also seeing used car market also as an alternative. So I believe that the entry hatch segment will be under greater stress as compared to the industry overall.
Right. What would be your full year estimate for FY26? So if I'm not just speaking about Tata Motors, but I'm speaking at an industry level for passenger vehicles.
I said that, it is going to be very moderate growth as we have seen in FY25. That's broadly the, consensus that we are getting once we talk to the forecasting agencies or even our industry peers. So it seems to be so far, based on the trailing trend that we have seen on the demand side in the last 5-6 months, it continues to be the same, and therefore we are expecting a moderate growth.
Right. When it comes to electric passenger vehicles, Tata Motors is still in the pole position, but the pie has been increasing. There are more players entering, and their sales are going up on a monthly basis as well. There's a lot of competition for you. What would you be doing in terms of fighting out or navigating this competition? You've got a big Harrier EV, a Sierra EV also coming up, but larger plans to make sure that you're able to continuously make a mark.
Parikshit, we are segmenting the electric vehicle industry into four parts now as the industry is growing in size. One is the entry segment, which is mostly used as city cars, less than 12 lakh. Then there's a 12 to 20 lakh segment, which is seeing intense competition because all the models are getting launched by all the players in this sub-segment. And there's a good potential that is also emerging in greater than 20 lakh segment. There's a fourth segment, of course, which is the fleet segment. Let me talk about our position in these four segments. One, that we are not present right now in the greater than 20 lakh segment. So we'll come with two very strong products, which is Sierra EV and Harrier EV. So that should help us expand our volumes by entering into a new segment, which is showing promise. Entry segment with Tiago and Punch, we are the dominant player with 75% market share. It is the mid segment, which is 12 to 20 lakh, where we have lost the market share the most. The idea now is going to be further enhance the value proposition of Tiago and Punch in the entry segment to expand that segment more, and we are doing certain interventions there. Strengthen the Nexon and Curve further in terms of what value it offers to the customer at a certain price point, and regain some of our lost market share in that segment. And then you have a new segment that in any case I said we are entering, which is greater than 20 lakh. On the fleet segment, we want to expand the consideration of the fleet buyers. So far, it has been limited to employee transport and some of the electric vehicle focused shared mobility companies, which has been under stress. And therefore, for doing that, we are trying to see how our electric offerings in the fleet segment can deliver similar kind of value as what a CNG vehicle delivers. And that's also work in progress. So in short term, these are the actions in all these four segments, which should strengthen our volume growth as well as the market share. And in the long term, mid to long term, we aspire to hold 50% plus market share. For that, apart from these actions, we'll also renew our portfolio with more promising product in time frame of 18 and 24 months and beyond. That is something which we will talk about at the right stage.
Mr. Chandra, always a pleasure talking to you. Thank you so much for speaking about Tata Motors' product offensive for FY26 and why the Altroz upgrade was so important and so critical for the company. Thank you once again for being with us. Time for a short break, but coming up, Marriott International has launched its new global brand called Series by Marriott. A special discussion with Rajiv Menon, President of Marriott International's Asia Pacific, excluding China region, when we return.